Welcome back to another lesson. We continue revising Introduction to Financial Accounting, Rchrp, and in this video, we are going to look at an exam that was done in June 2021, and our focus is on question number 2. Question number 2 reads, Rchrp Enterprises had the following balances related to the year ending that 1st December 2019. We have inventory, we have sales, furniture, premises, salaries, returns inwards, account receivables, carriage inwards, drawings, rent receivables, general expenses, all the way up to bad debts. You are required to prepare a trial balance. Now, this is Rchrp Enterprises. We come here and prepare our trial balance. This is Rchrp Enterprises. Rchrp Enterprises trial balance. The trial balance has a debit and a credit. What you need to identify is what items have debit balance and what item has credit balance. One, assets are, when they are being transferred to the trial balance, they all have a debit balance. It therefore means inventory, this one will have a debit balance. You come here and record inventory. Inventory will have a debit balance of 72,500. You move on and move to the next, sales. You see, when you are recording sales, initially the sales are credited. It therefore means when you will be transferring them to the trial balance, sales will have a credit balance. Therefore, we come here and record sales. Sales 3 million. Next, you are given is sales furniture. Furniture is an asset, then it will have a debit balance. That is furniture. Furniture will have a debit balance 675,000. As you can see it from the question, 675,000. Next is premises. Premises, they are assets and they are going to have a debit balance. So premises 3.4 million. Come here and record premises 3.4 million. You move on to the next is this is salaries. Salaries, these are expenses. Expenses have debit balance. Salaries. Here you need to have the knowledge on how to prepare ledgers. Salaries, that is for 16,000. Salaries, you need to know how to treat them. Salaries, they have for 16,000. Returns inwards. You see, when you have returns inwards, these are sales that you had made and they have been returned. It therefore means they are going to be an asset to you. Those who are sales made and they have been returned. Yeah. Therefore, and similarly, they are supposed to reduce your sales. Therefore, you debit. Therefore, we are saying that returns inwards, they are going to, you had made these sales, so they have been returned. So we come here and mention that returns inwards, they are debit. They have debit balance. Returns inward of 82,500. returns inward of 82,500. Next is account receivables. These are debtors. Account receivables, they are assets. So account receivables of 925,000. Then we have going to this account receivable, we have carriage inwards, we have drawings. Yeah. Now, carriage inwards, we see that these are expenses that are incurred to bring goods to your shop or to your warehouse. Yeah. So in this case, they increase your purchases. Yeah? So in this case, you are going to have debit balance. So carriage inwards, the carriage inwards 47,000. Then we have drawings. Drawings, they reduce capital. When you make drawings, they are going to reduce capital. And since capital has a credit balance, to reduce a credit balance means the drawings will be debited. Drawings will have a debit balance. Rent receivable. When you have an income is credited. Yeah. So rent receivable will have a credit balance. There is 60. Then we have general expenses. Expenses have debit balance. You debit. Then we have carriage outwards. These are expenses you incur to carry goods from your warehouse to your customers. So this one, carriage outwards, they are expenses, 160, 500. Then bank, this is an asset, will have a debit balance, there is 70,000. Then we have purchases. Purchases, they have a debit balance, 1,825,000. Accounts payables. Accounts payables are liabilities. So they are going to have credit balance. Then we also have capital. Capital has credit balance, 3,187,900. And then we have discount received. When you receive a discount, means that it's an income. Discount received income has credit balance, but discount allowed is an expense, so it has a debit balance. Then we have bad debts. That is 149,500. Good. Then you balance them. Balance your figures. That's why it is called a trial balance. You balance this one, you add all this, you get 8,532,900. This is 8,532,900. That is it about preparing a trial balance. Here you needed to know which item has a debit balance and which item has a credit balance, so that you can prepare your trial balance. We move on to the next part. You are told explain 5 advantages of a firm that prepare bank reconciliation statement. Why do organizations prepare bank reconciliation? Now, the first advantage is to update cash book. To update cash book with some items, appearing in the bank statement, but missing in the cash book. Yeah? E.g., you update the bank charges, you update interest charges or interest received, interest charges, dishonored checks, interest charges and dishonored checks So this reconciliation will make sure that the cash book and the bank statement complies or are in the rhyme, or they are in the figures are the same. Another advantage of this is to make adjustments for any errors in the cash book, It's not necessary that you have to compare the bank reconciliation or the bank statement and the cash book. You can also check whether the items that were written in the cash book were correctly entered. Now, another advantage here is to detect and prevent errors and fraud. To detect and prevent errors or frauds relating to the cash book. Good. Another advantage you prepare, or the reason why a firm should prepare, a bank reconciliation statement is to communicate to the bank, for any corrections, so that the banks confirm that they have agreed with the information that you have listed below. And finally is to comply with professional standards. It is the duty of the directors to keep financial statements that are free from errors and frauds, and facilitate auditor in confirming the same. Therefore, when they do bank reconciliation, it's a process of ensuring that the financial statements are prepared free from errors and fraud. That means they comply with professional standards. Basically, those are the main advantages of preparing a bank reconciliation statement to a firm. We're going to stop there. Meet in our next video.